From overproduction to stocking inventories to aiding the sickening, dying cyclical PC market to losing market share in the data center to issuing very poor guidance, Intel just reported disaster earnings. Hello fellow investors, here is Intel's earnings snapshot, my fair value, my recommended price targets, and my general thoughts on the stock. A lot of reds here guys, and they're not good. The only thing good here is free cash flow, and I'm not entirely sure about the number. I just crunched it myself based on my understanding. I think I'm gonna have to recrunch those numbers again. Anyway, revenue is down 32%. Now, this is not surprising actually. It's kind of anticipated as seen in the analysts' estimates. That's why I want you guys to subscribe to my Patreon, which I'm officially launching Monday. I give fair value, analyst estimates, and future fair values based on those estimates. All of those things, guys. You might want to watch till the end of the video if you're a first-time viewer. You'll see what I'm talking about. Also, Microsoft, who reported earnings earlier, kind of hinted this on their OEM hardware segment of business. So we do see some slowdown in the hardware tech. Also, TXN gave it away too, saying that they saw weaker demand on all end markets except the automotive, which was not surprising as seen at Tesla. Net income is down, EPS is down, everything is just terrible. This is why, guys, I specifically told you don't buy Intel on their earnings and free cash flow basis. Don't value them on PE and price to free cash flow. Don't buy them on those metrics. It doesn't work anymore because they're spending too much. If you don't believe me, watch my previous video. I even said traders don't own this just yet. Again, my fair value for Intel comes down to 1 PB. How much are you willing to pay for those books? Which, surprisingly, my fair value for the stock increased, only because their equity increased. 1 PB for Intel is my fair value. You don't want to buy this at fair value, you want some margin of safety there. I personally use 30 to 60%, the higher the better. Be conservative. Last time, I told you I could be buying Intel at 0.7 times book, but right now, the way I'm seeing things, I want more margin of safety. Intel might be a dying company, so be careful investing too early and so much. But I'm still optimistic. But you have to understand that this is a long-term play, of course. You can trade now and then, but long-term is the right play here. Collect shares, collect dividends. What to make of this financials? Is it priced in? Well, one, I want to confirm if this is just Intel's problem. I want to see other chips earnings, especially from AMD, MU, QCOM. Yes, QCOM, because there's a lot of hardware side to QCOM as well. We actually saw the same thing with NVIDIA last quarter. But obviously, it's the most loved stock now. Look at the PE. It's a growth stock, with revenues not really growing. Well, at least that quarter. Also look at the stock. It's up 25% with that terrible earnings, mind you. Also, KLA, CLAC, reported earnings. Free cash flow is down, guidance was lowered. Maybe that's why it's down big as well. But obviously, Intel dragged them all. TSM reported well, but let's face it, they have a much bigger market share and it's still growing. So, yeah. Also, I want to look at HPQ and Dell. Their earnings, how the PC market is holding up, because I want to know if this is just an Intel's problem, right? Now, is it priced in? Yes, kind of. But one thing I learned about the US markets, nothing is ever really priced in. And that's good sometimes because it creates opportunities, especially when the stock has too much bearishness. It's become oversold, those kind of things, right? What's to come from Intel? Well, one, they're gonna issue more shares. That's not really out of the equation. They're gonna issue shares. The equity will look bad. The revenues, of course, will look bad. Everything will look bad as interest rates remain high. It's going to be a huge problem with Intel going forward. Cut back some spending. SBC has got to come down also. Cut the dividends, but I'm sure a lot of people will not like that. And it could easily see sub 15 if it ever happens. But really, it's a good move. So yeah, I'll stick with don't own it just yet. Trade it. You want to buy it below fair value. which is the book value of one. Have some margin of safety. These metrics, revenue, equity, debt, all those things will all depreciate more as interest rates remain high. I'm still bullish long term, but I'm not looking to enter any position here yet at the current prices.